Something. All right. We said a complete set of financial statements include statement of financial position, statement of profit or loss, and comprehensive income, statement of changes in equity, statement of cash flows, notes to the financial statements, then comparative information. We'll make this as fast as we can. General features of financial statements. 1, fair presentation and compliance with IFRS. And there is this question: when an auditor issue the auditor's report or prepare the auditor's report, and in that last paragraph, the auditor says, in our opinion, the financial statement represents a true and fair view. What is it telling the world? Or what is the auditor telling the stakeholders? So fair presentation and compliance with IFRS going concern assumption, accurate base of accounting, consistency of presentation, materiality and aggregation, no offsetting unless permitted. Then we have statement of financial position, SOFP overview. What are the elements of statement of financial position? Ladies and gentlemen, once we remember the accounting equation, the assets is equal to capital plus liabilities. So those are the elements of statement of financial position. Asset is equal to capital plus liabilities. For those of us who were in class a couple of weeks ago, while in Nigeria, I said again that it also means ownership must be equal to ownership. That's accounting equation. So it shows financial position at a point in time. Key elements: asset, liability, equity, and is classified into what current and non-current. That's when we say asset now. We talk of non-current assets. And this another area I want us to take note that in IFRS, when we talk of statement of financial position, assets are arranged in order of durability. That's why we start with non-current asset. Now we add current asset to that, give us total asset. Then we now come back to sources of the finance. How are we financing these total assets? Then we start with shareholders' equity. And shareholders' equity, we talk of ordinary share capital. Then we talk about the reserves, capital reserves and revenue reserves. When you add all this together, we have shareholders' equity. Then we talk about the non-current liabilities, such as loan debentures, mortgage, and the rest. Then we do current assets. Then we have the total current asset with the total equity, which must be equal to the total asset. Classification of assets, we've seen current asset there, then non-current assets. Classification of liabilities, we see current liabilities, and we have seen the non-current. Settle within 12 months, trade payables, short-term loans, the non-current liability, long-term obligation, bonds, long-term borrowings. Statement of profit or loss. And are we there? And other comprehensive income. That is the OCI here. Statement of profit or loss and other comprehensive income. Ladies and gentlemen, when it comes to statement of profits or loss, we have two methods of preparing this. We have the single approach, then we have the two approach. When you are preparing your statement of profit or loss account and other comprehensive income, and you adopt the single statement approach, it means the parts that address the normal business a company is into with the parts that address the one exogenous to the company. They are all mashed together. So if you look at this sample format, you see sample format for statement of profit or loss and other comprehensive income using the single approach. You will see items like turnover. You remove cost of goods sold. You have your gross profit. From gross profit, you remove other operational expenses, operating expenses. You have profit before tax. You apply your tax.
Madam Janet, you are distracting us. Prof is talking.
Please, everybody should mute everybody. Us hold on. So once you have your turnover, you have cost of sales or cost of goods sold, you have gross profit. From your gross profit, you deduct all operating expenses. You have your net profit. Some other time, it may be operating profit. Then from the operating profit, you deduct some fixed charges for the period. Then you arrive at net profit before tax. When you charge your tax, then you have what is called profit for the period. Some other people call it net profit after tax. Ladies and gentlemen, that moment you arrive at net profit for the period, you are done with the accounting for the activities normal to the business. When I say normal to the business, if you register a company and the sole focus, the key object of your company is to manufacture and sell assets. By the time you prepare the statement of profit or loss account to account for how many assets have you sold turnover, and you have deducted the cost of production, all other incidental expenses, and you arrive at what we call profit for the period. At that point, you have accounted for activities normal to your business. You stop there. But the moment I now said other comprehensive income, I decide to continue. And I begin to say revaluation of asset. Our normal business is not to revalue asset, it's to manufacture and sell asset. By the time I bring items such as gains from foreign exchange, our primary business is not to go into forex. So all those items that are not primary to your main objective are the one classified as other comprehensive income or expenses. So if I now add together the income or losses we incur from forex or from revaluation of asset, I add it to the profit for the period. Then we have what is called total comprehensive income for the year. In that case, we have what is called statement of profit or loss and other comprehensive income using the single statement approach. But if you want to do the two statement approach, what I will do, as soon as I arrive at profit for the period, I will close my account. I will now go and start a new account. I will call it other comprehensive income. Statement of other comprehensive income or comprehensive income statement. I will start afresh. When I start afresh, a new page with a new heading, the first thing I will do, I will bring in profit for the period. Then I will add all those items that are exogenous, that are not addressing the primary object of the company. In that case, I will still arrive at the same total comprehensive income for the year, but I'm doing two statements. See other comprehensive income? See it now. Items not recognized in profit or loss. I've just given us example now. Like forex, foreign exchange gain, foreign exchange loss. See it here. Example, revaluation surplus, foreign currency translation differences. Presented net of access or before tax with tax shown separately. Here we have another statement of changes in equity. Ladies and gentlemen, when we took a question while in class, under IPSAS Aqua, I explained to us when they say statement of changes in equity is another word for statement of changes in net worth or net asset. And when we say net worth or net assets here, all we are trying to say is what is the value, what is the net worth of a company at the beginning of the year. Then we want to see what are the activities that impacted on the worth of this company during the year. Then what is the worth of the company at the end of the year? The statement we prepared that explain this is what is called statement of changes in equity when we come to IFRS. But the same statement when we go to IFRS accrual, they call it statement of changes in net asset. See, it here shows movement in equity during the period, profit or loss for the period, dividends, share capital changes, reserve movement. Then statement of changes in, or statement of cash flow, prepared under IAS 7, shows cash inflows and outflows, classified into operating activities, investing activities, and financing activities. I want to be sure it's your class. I gave one exercise like that, and I asked you to classify, because I've seen a past question paper. That should be an ICANN exam, one past question. Was it the year I wrote ICANN? Now looking at the question paper, what they did not ask students to prepare statement of cash flow. They helped them to prepare the statement of cash flow. But what they now did, they mix up all the items. The one that is supposed to be under operating, they put it under financing. The one that was supposed to be under financing, they put them under investing activities. And they ask students to prepare to represent that same cash flow statement in the standard and correct formats. So it's good you know what are the items under operating activities, what are the items under investing activities, and what are the items under financing activities. See cash flow method, we have direct method, we have the indirect method. See something, IFRS encourages what? The direct method. Then notes to the financial statement. This is where IFRS and IFRS a bit different. Before now, if you look at one of our statement for accounting standard, they will tell you abridged financial statement. Just summarize. Management at the top don't have time to read too lengthy reports. But under IFRS or IFRS, they want all the detailed reports. And this is one of the limitations of IFRS or IFRS. Information overload. Go and look at a sample IFRS of a multinational company. You will realize that some of them, the pages that will address the main general purpose financial statement prescribed by IAS 1 may not be more than 10 pages. But when you look at the notes to the account, some can even be up to 80 pages, because IFRS is saying if we're going to achieve our objective of accountability, transparency, and comparability, peradventure, there are transactions that you cannot express in monetary terms, state it as notes to the account. So in the notes to the financial statement, say provide additional details and explanation, which include accounting policies, breakdown of line items, judgment and estimate, essential for full understanding. So that somebody who is even a layman who don't understand figures, you can read English. There was a comparative information required for all amounts reported, at least one prior period, enhances trend analysis and comparability. Minimum line items, and see that examples include property, plant, and equipment, trade receivables, share capital, inventories, cash and cash equivalent, trade payables. Let's leave all these formats. Common presentation errors, incorrect classification. You remember one of the questions we solved when we are handling IFRS accrual. We are giving the financial statement prepared under cash basis, and we are asked to prepare opening statement of financial position. What was the task we did then? If you remember, we reclassify. So when you make mistake, classify an item that is supposed to be current as non-current. That means technically the financial statement is faulty. Omission of other comprehensive income items. I've given us examples of other comprehensive income items like foreign exchange translation gain or loss, actuarial gains or loss, then revaluation reserve or revaluation loss. Inadequate disclosures of certain assets and liabilities improperly. So we go now. That's key takeaways. IAS 1 provides structure for financial reporting, and we say complete set of financial statement is mandatory. Proper classification enhances clarity then disclosures are as important as number. This is where we stop for the foundation. I will share this slide with us. We'll quickly look at one or two questions as a matter of how we can solve those questions. And I've made it easier by sharing on your platform the template. See what we are doing. Last week, I had a class here in the US with Southeastern Louisiana State University. They are master student, management information system to be precise. And why am I sharing this with us? Here in the United States and other developed countries, the mentality is this. They prepare students for the industry, not just to pass exam. That's why mostly here is do it yourself. Teacher come to class or lecturer or professor come to class. They show you the guide. Huh? They show you, okay, give you examples. Then they give you they give you assignment. Go and do it yourself. And of course, when they give assignment, you are free to use your laptop, to use your Chromebook. That's why use Chromebook, as long as you did not use AI. Because we have cases today, as I'm talking to you, of Nigerians. Those are the people I know. It's not only Nigerians, there are other African students. They've stopped their scholarship. They are here for PhD. But these guys, I don't know how somebody will go and fall victim. All the assignment their professors give to them using AI to solve. Forgetting that they have AI policies. Forgetting that they also have AI tools that detect how much of AI you are using to solve assignment. So some of them have relocated back. They've gone back to Nigeria because they stopped the scholarship. I know the meaning of stopping scholarship here. We are talking of over $6,000 thereabout per semester. That's what they pay for some of this PhD program. So some have relocated, and we have another one now that they did not renew. What was the offense? That they discover excess use of artificial intelligence. They give you the system, but not for you to now go and use. They give you question to solve. Just take to AI, either ChatGPT or Copilot or Gemini. There are a lot of them. All right. So I've shared the template with us. Prepare some of us also. I know some of us are already consultants. You are in practice. But for exam, ladies and gentlemen, except the department allow and say you are going to allow you to use your laptop. For exam, nobody will give you templates. And that's why I've said all you just need to do, have a mental picture of the format. If I've taken this lecture from our center here, we have a multipurpose center. Here, there, we have a smart board. I will use the whiteboard, the one you see as I do this thing on the board. Our last contact, that's we have today's contact. We have only one contact. We are done with the class. Maybe when we meet for the revision and our last contact, I can do that. But all I just want you to grab today is have a mental picture of the format. You are asked to prepare the statement of profit or loss account and under comprehensive income. Statement of profit or loss and other comprehensive income using the single statement approach. I've told us all you just need to do turnover minus your cost of sales. You have gross profit. Then deduct all incidental expenses. You have operating profit. From the operating profit, deduct fixed interest charges or add fixed interest income. Then you have profit before tax. Then apply your tax. You have profit after tax. And they call that thing again profit for the period. You may decide to use profit for the period or profit after tax. Once you get to that level, I'm telling us that you have successfully reported the main line, the main business of the company. At that period or at that moment, you have profit for the period or profit after tax. But if you now look at your question and you see revaluation gain or revaluation surplus, and you also see foreign exchange translation gain or foreign exchange translation loss, or you also see actuarial gain or actuarial losses, or you also see revaluation surplus or revaluation loss. Those activities are not part of the business of the company. They are the items that will appear under the other comprehensive income. So you list them, put the amount there. The one that is negative, that's loss, you put a bracket. By the time you now match all these with your profit after tax or profit for the period, we have what is called total comprehensive income for the year. These are the things we need to know. And that's why I don't encourage students when I just give you a case study and we solve, it's just to tell you to have an idea. Some of a PhD, this is not undergraduate. I'm sure some of you, chartered accountant, certified accountant, you have clients that you even attend to that you audit their company. So it's not new, this PhD, but I don't want to be assuming that it's everybody that is having a mastery of preparation of IFRS. Our own is just to draw your attention, then you do the needful. Now, again, when we come to the statement of financial position, you have a mental picture also. Okay, what are we expected to do? A quick recap. When it is IPSAS accrual, you are asked to prepare statement of financial position in accordance to provision of IPSAS accrual and the publication by the subcommittee of the Federation Accounts Allocation Committee. You know, for IPSAS accrual, assets are arranged in order of liquidity. Public sector, money, after money. And it's not because of that. You know, in our public sector, before now, it's cash basis, so cash and carry. So for statement of financial position in the public sector, for IPSAS accrual, you start with cash, you start with current asset. And that's where you have cash and cash equivalent, receivables. Then we have the uh, debtors. That's another word for receivable. We have prepayment, we have bank, and the rest. Before you talk of non-current assets. But when it is IFRS, you start with non-current asset, you start with non-current asset, add your current assets, you have total assets. Then take care of shareholders' equity and liabilities. I'm going to share now, quick. We have like 30 minutes. We can complete this thing within 30 minutes, actually. We have about 4 questions. I will share the questions. If you check your platform, we all have the question. I've shared that question before now. Then those templates I shared, I expect you to copy them to your desktop. If you don't have your desktop or you are still driving, you are not home yet, when you settle down, you go and do what you see us doing now. All right. Foundations of IFRS and conceptual framework. There is no any question here. It's just for you to classify. See scenario, the first question, a company, Alpha Limited, carry out the following transaction. As a matter of fact, let me leave this one because here is just asking you, identify and classify each transaction into appropriate element. Remember, this PowerPoint presentation, I started by saying elements of financial statement, and we say asset must be equal to capital plus liability. That's for the statement of financial position. Then what are the elements of the profit or loss account? It's just recurrent expenditure and recurrent income. That's where you are seeing income and expenses. Income expense. Here we are asked to identify and classify each transaction into appropriate element. Purchase equipment worth 5 million, they just expect you to say, is it an asset? Is it a liability? And if you say it's an asset, is it current or non-current? And the rest. So there's nothing to do here. Let's go straight to the one that will require those templates. See question 1. Alpha Tech Limited, a growing technology firm, provide the following trial balance as at 31 December 2025. See the trial balance. In exam, Somebody may say if you have more than enough time, they give you things like this. Somebody will, let me first check whether the trial balance even balance. Because once your trial balance did not agree, it will affect your final account. But we are not doing that now. It's just to draw our attention. Additional information, depreciation for the year has been included in the trial balance. Can you see that? A provision for doubtful debts of 200,000 is required. Income tax expense for the year is estimated at 1 million. No dividends were declared during the year. But let's see something. These are the figures for trial balance. Just by way of refreshing our memory or refreshing our mind, what we know already, the double entry principle as discovered by the Italian Luca Pacioli. When you see trial balance, of course, all items, you say debit receiver, credit giver, debit all expenses, credit all losses. Sorry, debit all expenses, correct. Debit all expenses, credit all income, revenue, and profits. Then debit all assets, credit capital and liabilities. So when you see revenue, of course, credit, cost of sale, debit, and so on. Let's go to the question. Required. We are asked to prepare a statement of profit or loss for the year ended 31 December 2025. Number B, prepare a statement of financial position as at 31 December 2025. Those are the questions. What we do in this case, if you have your biro and paper, if you want to solve this, I just told us the key there. If you have enough time, why not? First, quickly draft your trial balance. But if you are not sure of the classification of these items in trial balance, I will advise also in exam, don't bother yourself. Just go straight, answer the question. But the only key is that you make sure all these items must go either into profit or loss or go to statement of financial position. And your additional information must obey the double entry principle. Which account are we debiting? Which one are we crediting? Let's take question 2 also, that once and for all. Question 2 is on statement of cash flows. Omega Manufacturing Limited provides the following information for the year ended 31 December 2025. Extra from statement of profit or loss. See revenue 40 million, cost of sale 22 million in bracket, gross profit 18 million, operating expenses excluding depreciation 8 million, depreciation expense 2.5 million, profit before tax 7.5 million, income tax expense 1.5, profit after tax 6 million. We have extract from statement of financial position. See it here given to us as at 31 December 2025. Then as at 31 December 2024. Ladies and gentlemen, if I'm asked to prepare statement of cash flow and I begin to see balances for 2 years, 2024, and I have balance again 2025, what will come to my mind straight that they want me to use the indirect method. But if I am giving summary of cash book, maybe cash book, and in that cash book, I see receipt from customers. Huh? Sorry, receipt from customers, you collect money, cash receipt from them, then payment to creditors. In my cash book, they give me cash book summary. I will know that the examiner wants me to prepare statement of cash flow using the direct method. So any question you see, they give you profit before tax, and you are asked to do cash flow statement or statement of cash flow, is indirect method. Let's see the question. Say, prepare a statement of cash flow for the year ended 31 December 2025 using the indirect method in accordance with IAS 7 statement of cash flow. Let's look at this question. This is 2:33 p.m. in the US. It means it's 8:34, 8:33 in Nigeria. I can assure us with the template we have, exactly 9 we should be done with this class. Wherever we stop, you go and continue yourself. We already have all the template you need to answer those questions, except the last part. So the very first template that I share with us, I call it template number 1. See it here. We need this to answer those questions. And I've designed this template in such a way, please pay attention. For some of you who are system inclined, I learned one of your classmates is already a charter certified system accountant, member of ACCSE Global. So we are in an era of digital revolution. Some call it era of digital Darwinism. Now, not only accounting, but all professional digital tools, they are now necessity. And we tell accountants, even if you don't know how to use other accounting software, Excel is a necessity. Ladies and gentlemen, there is a way I can even design a financial template using this same Excel. That all I need to do, see, if I've done that before, and during one of our master classes, we have looked at that. All I will do, I will start from what we call accounting cycle. From journal, I will design the journal. I will link the journal. We know after journal is ledger. The after ledger is trial balance. After trial balance, income statement. That's final account now. Income statement. Then statement of financial position or balance sheet. Or then I can say cash flow. So there's a way they call it financial modeling. There's a way I can design template so that all I just need to post is I go to journal, book of original entry. Which account are we debiting? Which account are we crediting? Once I post debit in the journal now, I just post the figure, debit this, credit. From journal, there's a way you link the sheets together in the design of the template. From that journal on its own, it will post it to ledger. From ledger, it will post to trial balance. In fact, at the end of the day, when I'm done with my transaction, we can configure an Excel template in such a way that it will balance itself up. You know, we have closing balance, and that's what we call balance carried down in the ledger. The balance carried down one period is the balance brought down. The next day, the ledger, that's the trial balance, we pick all those balances, extract the trial balance on its own. From there, I link to the income statement. And what am I doing? Just to post. They just got to get like this. Run. So, but this time around, I did not do that. What I've done, that's another way. All you need to do here, that will make our work easier. Check. Statement of profit or loss, vertical method. Enter input figures in column D. And one beautiful thing about Excel is that it is flexible. Peradventure, in real life now, you now have other items in the trial balance as given in this question. You know, there are just few items. Maybe there are some items now in your trial balance. As long as you are sure of your reclassification, that those items are either recurrent expenditure or recurrent revenue, all will come in here. See, so you can introduce what I'm trying to say. You can insert additional column, then put in other items that are not addressed here. But because of time, let me just go ahead. What is revenue? See what I'm doing now? From our question, if somebody have it, okay, I'll be swapping now. Our revenue from the question is 25 million. See what I'm doing? Meanwhile, the statement of profit and loss accounts. See, this is a template with formulas. You are only permitted to type. You are not typing anything here. Just feed in the data here. The others will be populated. That's what we are doing here. 25 million. Watch. Enter. The moment I put 25 million in this input line item, see, because I've linked this together, let me show you. Revenue, I've linked it, is equal to D5. Excel look for D5, that's giving us 25 million. Then our cost of sales from the question is what? 12 million. I put 12 million, enter. See something? Already we have our gross profit. And this is the format I have said you should have a mental picture of how statement of profit or loss look like. The next thing, I'm just typing only the figures from our trial balance. Salaries and wages, we know is a recurrent expenditure. I type it 4 million, enter. Rent expenses, 1,500,000. I type that. Can you see the impact on our income statement? Utilities expenses is 800,000. I type that. Depreciation expenses, 1.2 million. I type that. Provision for doubtful debts is 200,000. I type that. Income tax expense, 1 million. Watch now. That is all. With this, we are done with the profit or loss account or statement of profit. I did not waste time. See, it's a different ball game. Your class, what we do is just to look at final account. But if we have another class and the topic is financial modeling, that is when I will now begin to use Excel to now show how to link all this sheet together, how to insert formula. That's not what we are doing here. All right. See our revenue, gross profit, operating expenses. See what we have here. Can you see something? Total operating expenses, profit before tax, our income tax expense, then we have profit after tax, which is 4.3 million. We are done with income statement or statement of profit or loss. That's the beauty of technology, time saving, then accuracy. As long as your data are correct, we have the GIGO principle in computer, garbage in, garbage out. Now, let's go to the second question. You have the question I've shared on our platform. That second question asks us to prepare what? Statement of financial position. See my cursor here. When you download those templates from your platform, you copy to your desktop. You just click here, click. See what we have here. This is our statement of financial position. That's the format. And this kind of design I've done is just to allow you to populate, just fill in the data. Now let's see, what do we have as our property, plant, and equipment? From the question, we have 19 million. You type 19 million, enter. Accumulated depreciation, check your question, is 3 million. Inventory, 4,500,000. Trade receivables is 3,200,000. We type that. Allowance for doubtful debts, is one of the items in the additional information that I said must obey the double entry principle. We have recognized it in the profit or loss account. The second leg is statement of financial position. Let me reemphasize that. When you are preparing final accounts, any information in your additional, that any transaction in your additional information should be subjected to the double entry principle. Which account am I debiting? Which one am I crediting? Let's see cash and bank. From our question is 2,300,000. Share capital we are given as 10 million. Type 10 million. Operating retained earnings. We have 2 million from our question. Are we there? Then bank loan is 5 million. They are all in the question. Trade payables, 3,500,000. You see, all I'm just doing is to populate this. I'm not preparing anything. The income tax payable, you see that is 1 million, even from 1 million. That is all. Now let's see our statement of financial position. Ladies and gentlemen, if there is anything I say we should remember, the format. Can you see? The statement of financial position here starts with what? Non-current assets. Less accumulated depreciation. We have net non-current assets. See current assets. We have trade receivables, less doubtful debts. Net trade pay receivables. Then cash and bank. See our total assets. An accounting equation says what? Asset must be equal to capital plus liabilities. So let's see our equities and liabilities now. Share capital, see it, 10 million. Opening return earnings is this. Then our profit for the year from the P&L is 4.3. Then closing return earnings, 6.3. Our total equity, you can see 16,300,000. Let's go now. See non-current liabilities. Only one item, bank loan. Then see our current liabilities, trade payables, 3.5. Income tax payable, 1 million. Total current liabilities, 4.5. Total liabilities. When you now add your total liabilities plus your total equity, see what it's going to give us. Total equity and liability give us 25,800,000. An accounting equation also says asset must be equal to what? Equity plus liabilities. So you look at this, 25,800,000 total asset, then total equity and liability is 25,800,000. It means ownership is equal to ownership. Assets are what you own. Liabilities are what you hold. And here, there is even a balance check for you to check the accuracy of your work. There is no need to test run this. But if, for example, instead of 3.5 million, I decide to put 3 million for trade payable, just watch. See, it will tell me there is a disagreement, that this statement of financial position did not agree, and the variance is 500. You go and begin to look for where something has been missing. The last question we take, let's see something. We have a second question on, what's that now? Cash flow statement. So for the cash flow statement, let me quickly share that. I will have 14 minutes left for this class, except for question. If you have question, exactly 9, I want to stop. See for cash flow statements, see the format. See the format. Already taken care of. Format here, I did mention this is indirect method. And what do I need to know when we talk of indirect method? Let's see the input. So if you have your template input, just similar to what we did for this statement of profit or loss account, all we need to do here is to key in. But ladies and gentlemen, before we key in, what do I need to know about my indirect method of cash flow statement? Have that mental picture. What is the format? Once you have it in your mind, that you start with cash profit before tax. You start with profit before tax. You add back items not involving the movement of funds, such as depreciation. Then you adjust for working capital. Once you do that adjustment for working capital, and that's why they have given us current asset and current liabilities in the previous year and the last year. So that when you find the difference, when there is increase in current assets, that means an outflow. That means you have 500,000 worth of asset at the beginning of the year. Okay, at the beginning of the year, correct? And at the end of the year, it now increased to 1 million. That means you have paid for additional inventory if they are not stolen. That's outflow. But if current asset reduce, you have current assets 1 million at the beginning of the year. Then at the end of the year, current asset, that's inventory now, has reduced. If those items were not stolen, you have sold them. That means money has come in. That's increase. That's inflow. So these are just basic principles you need. The moment you are done with net cash from operating activities, the next thing is cash from investing activities. Like landed property, you have invested in land, you have invested in machine, you have invested in property, and so on. That's investing activities. Then we have another one, cash flow from financing activities. What are the various sources of finance? Issue of shares, issue of debentures, and the rest. Once you have this idea, you should be able to prepare. So what we are going to do without wasting time here, please let's check. Profit before tax. Watch from our question. We have profit before tax, 7,500,000 is given. And there is even a note here. See, use P&L figure 2025 current year. Are we there? Depreciation expense from our question is 2,500,000. I'm just populating that. Property, plant, and equipment, 15 million. Inventory from our question is 4,200,000. Trade receivables is 3,800,000. You will see trade receivables both for the year, 2 years. Then we have trade payables. Put 4,500,000. Cash and bank, 2 million. Then we have bank loan, 5 million. All right, then we come to 2025. For 2025, watch. What is property, plant, and equipment? Is 18 million. From our question, then inventory, 5 million. These are the areas I want us to do some analysis. Can you see something? Inventory, the closing balance in 2024 is automatically the opening balance in 2025. So as at the end of 2024, inventory was what? 4.2 million. But at the end of 2025, inventory has increased to 5 million. This is movement of money. So this is an outflow. That means this company has bought additional inventory. So those are the areas you need. Let's go to trade payables. These are the technicalities. Trade payables, beginning of the year, 3.8 million. At the end of the year, 4,500,000, right? Then trade payables at the beginning, 4.5. At the end, 5,200,000. Cash and bank at the beginning, 2 million. At the end of the year, 3,200,000. Then we have bank loan. At the end of the year, bank loan was 7 million from our question. Then see income tax paid, cash paid during the year, 1,200,000. That is all I need to do. Ladies and gentlemen, what's the technicality in this? I'm not only looking at your exam, beyond exam, that in real life, you want to prepare statement of cash flow using direct method, and you want to use Excel to do that. All you need to do is to go and view your results, see what we have is being populated already. See what I just explained the other time. Profit before tax, add back items not involving the movement of cash, depreciation expenses. See it there, operating profits, profit before tax and depreciation. Then you now adjust for working capital. What are working capital? Current asset, current liabilities. See, increase or decrease in inventory. I know I told us when inventory increase, it is outflow. That's why you are seeing it in brackets. It increase. Then increase or decrease in trade payables. Trade payables also increase. It increased from 3.8 million to 4.5. So it's an outflow. And the rest, let's see now. We have net cash flow from operating activities. We have that. I'm just showing us. Then net cash flow from investing activities. The only item they invest on here is purchase of property, plant, and equipment. Then we have net cash flow from financing activities, loan received, sources of finance. Then at the end of the day, we have here opening cash and cash equivalent. Net increase in cash, they now added from our question, opening cash. All things being equal, ladies and gentlemen, once you come to net increase in cash and cash equivalent, and you add your cash at the beginning of the year, automatic, it is supposed to give you a closing cash balance in the question given to you or in your balance sheet. If it did not give you the exact amount, that means something is wrong, which is the case with this question. See, expected closing cash and cash equivalent is supposed to, let me even highlight this one. This is the correct, it's supposed to give us 6.5 million. But see, closing cash per statement of financial position input from the input sheet was 3.2 million. That means there is a variance, difference, reconciliation gap. And this is where you sit down as a PhD, as a doctor or a professional. So where have we missed it? It's very, very important. Nigeria is blessed with human and natural resources. I keep saying it. A couple of years ago, I was privileged to be the qualified accountant in a team formed, or we are giving us some presidential visitation panel. It was during the era of good luck, Dr. Goodluck Bello Jonathan. Somebody gave my name somewhere and said this guy can handle this job. So we are asked to go and investigate the financial affairs of some federal universities. I was the accountant. I think I've shared this with some of us. And when we go to this particular university, I said, among other things, I saw cash advance given to a staff, 100 million. I expected to see within that year retirement. No evidence of retirement. A year after, is it a year or 2 years after, I checked their cash flow statement. I now saw exact amount. They now say purchase of one asset like that. So that's a lot of questions. So you need to check. Maybe it's one of those things they just more good in. Ladies and gentlemen, I have 3 minutes left. And within that 3 minutes, I'm going to look at the last question, which is statement of changes in equity. That's template number 3. And if you have it also, you've downloaded, see all you need to do. This is the format for statement of changes in equity. It's very easy. All you just need to do is balance at the beginning of the year. Then when we say equity, what are the items that make up our equity? Ladies and gentlemen, shareholders' equity is ordinary shares plus reserves. And reserves are subdivided into capital reserve and revenue reserves. Once you have that one, and we have also explained that shareholders' equity is the same thing as net asset and is the same thing as net worth. And how do you arrive at net worth or net asset? Total asset minus total liabilities. You want to buy over Zenith Bank and you want to use the net asset basis to buy it over. You want just ask 2 questions. That's all you need. Give us the certified copy of the total asset of Zenith Bank. They say it's 200 billion naira. And that's an example. You ask a second question, give us the certified copy of the total liabilities owed by Zenith Bank. They say it's 150 billion naira. Just deduct 150 billion from 200 billion is 50 billion. It means Zenith Bank is worth 50 billion. So the statement of changes in equity is just saying what is the worth of our company at the beginning of the year? What are the transactions that has transpired during the year that has tampered with our worth at the beginning of the year? Then what are we worth at the end of the year? That is the statement of changes in equity. And from this question, it's so simple. All we just need to do is to key in the figures, statement of changes in equity. We have the shareholders. Just let me pull out. Let me pull out the question itself. Statement of changes in equity. All right, I think I have it now. Or to make it faster, if somebody can give us those figures from your question, that the whole thing will not be one way, being the one doing all the talk.
Please, I can't see the question.
Is there? I've shared it before now. It should be in your platform. Should be on your platform there. Any other question?
So I can't see the question either. It's only the Excel I can see, sir.
You can't see the question. Let me
Yes,
share.
sir.
I can only share one thing at a time. You know that? So let me
Yes, sir.
show us the question. Don't worry. I'm going to show us the question because we need to see question before we see solution. You are very correct. Here is the question. You can as well open that up from your platform. See it here. Question 3. See the case study. Zeta Technologies Limited provide the following information for the year ended 31 December 2025. Are we there? We can see it now. Extract from statement of financial position. Can you see share capital 8 million? That's as at when?
So at 31st December
2024.
2024.
Share capital is how much? 8 million. Share premium 1.5 million. Retained earnings 2.2 million. Evaluation surplus 1 million. See something. Then share capital, that's as at the end of 2025 now. Say share capital 10 million, share premium 2 million, retained earnings blank. Then revaluation surplus 1.8 million. Then let's see, I'm still scrolling. Extract from statement of profit or loss account. Are we there? Profit after tax for the year 4.5 million. See additional information. Share capital raised. That means during the year, they raised additional share capital. These are the items that will not change. Anyway, let's go. Share premium, 500,000. Dividends of 1.2 million were declared and paid during the year. A revaluation gain of 800,000 was recognized during the year. There were no other movement in equity. And this question says, prepare a statement of changes in equity for the year ended 31 December 2025 in accordance with IAS presentation of financial statement. Ladies and gentlemen, that is the question. Check your platform. I've shared it before, and I'm showing us again the template we need to solve that question. And let me go back now and share the template. See it here? Template 3. Check your platform is also there. This one will form your takeaway practice question. It's very straightforward. See, opening capital, you fill the figure. That's you populate the way we have done for others. Share premium opening and take note what is the opening. The closing balance in 2024 automatically becomes the opening balance in 2025. So those are the figures you key in here. What is share capital for 2024 December 31, which is the same thing as opening for 2025, because this statement of changes in equity is actually for 2025. Then return earnings opening, revaluation, new share capital issued. You see that in your additional information. New share premium, profit after tax, dividend paid. You are keying in just 9 items. 1, 2, 3, 4. Then you go here 1, 2, 3, 4, 5. That is all you need to do. Then you just go and check, go and watch. Here we stop for today. I promise us 1 hour, so you can go and rest also. Our last meeting. When is your exam starting? Is class governor online?
Monday.
Your exam start on Monday.
Yes, sir.
All right, that's a good one. So since your exam start Monday, I'm gonna fix another lecture for you tomorrow. That lecture will be both revision and that's general revision and overview of what we have done. So that tomorrow we just unpick. Already you have some of the question. I've shared it with you. It's just to now look at some specific IPSAS and IFRS. We have done that for IPSAS. We'll look at that for IFRS. And we wish you all the best. So let your class know, please, that tomorrow is our last contact. And that same tomorrow, I'm going to give us an assignment that we are going to submit. That assignment, you submit much more after your exams. I will let you know. The details will be there, the date of submission. All right.
Hello,
Enjoy
sir.
your evening.
Hello.
Please, sir,
Hello.
please,
Hello, sir.
please, sir, can
Oh,
you share
Prof,
the
please,
questions
I'm back
for
online.
today?
Can we
Please.
share what?
Can you reshare the questions again for today? The
It's not on the
questions.
platform.
No,
It's
You
not
don't
need
say
the
it's
there.
not.
Excel.
Don't say it's not on the
I
platform.
can't
The,
Ask
see
your
it.
the
classmate.
question is on the platform. We have the question on the platform.
How do you
Okay,
say it's not
please
on the
share
For the
it
platform?
with
people that
us.
Say
just
you can't
joined,
see it.
for the
Let's
people,
ask your classmate to
for
be
the
shared.
people that just
How will
joined,
you say it's not there?
they cannot access it.
The question is
For
on
I
the
the
just
people
platform.
that
reshared
just
the
joined,
question.
It has been reshared. It has been reshared.
Please reshare
I
Hello,
also
sir.
just I just
the
reshared the question now.
It
I
has
okay,
been
just
please
reshared
reshared
the
now.
question
reshare
now.
also the template. Class. Okay, I can see hands on up. Unmute yourself and ask your question, Mr. Henry.
Good evening, sir.
Good evening, sir.
Good evening. Yes, sir. First, let me appreciate you for heeding to
What's
our
it
appeal
now?
because this class was supposed to be for 5 p.m., but we made an appeal to you and you accepted and you brought it down. That we really appreciate, sir. Thank you very much. And then on today's lesson, I want to appeal. Maybe we'll have to make a little review when we are having revision because I don't know if it is because of stress. Most of the things we have done this evening has not really entered very well. Thank you, sir.
All right. Thank you very much for that. Now I want you to check. We have had two online classes before now? We met twice, right? Online. Then I was in your
Yes.
class once. Check as we are talking now, I want to pull out something and you will do 2 in 1. What I mean by 2 in 1, I've shared with us just hold on. I share with us the very first contact we had, overview and global relevance of financial reporting standard. Is a YouTube, the video. So even today's own, I will still share on your platform. You can create time. It's part of the revision already. So you can create time, go and watch those. For those of us who just joined, they are very useful materials as we prepare for the exam. Go and watch. Then today's own also, I'm going to share it tomorrow by God's grace so that you can go through over and over. Is that okay?
Thank you, sir.
And some of you, as you watch, you can as well subscribe to that YouTube channel. Or the subsequent material that will be of value, you can be notified. All right. Mr. Dotun Olashupo, please unmute.
Good evening, sir.
Good evening, sir.
Thank you very much, sir. As regard tomorrow's lecture,
Yes.
I think we still have another online virtual lecture in the evening. I don't know
What
the
time?
time your own will commence. Our own is that one is 8:25. Around
Okay.
8:15 or 8:25 there.
And your
Are
class
we
can
going to
agree.
use 5 o'clock?
See, wait now. Your class can agree. If tomorrow is not okay, we can do it on Thursday, 5 p.m. Huh?
All right. The
It's
class,
5
make an
p.m.
answer.
Class, 5 p.m. Thursday. Is that okay?
Perfect.
I think
Perfect,
that
sir. It's okay, sir.
5 p.m. last contact,
Okay, sir.
revision,
Okay,
and
sir.
takeaway assignment.
Okay, sir.
it's okay.
All right.
That's okay, Prof.
Wishing us
Okay.
all the best in our exam.
Okay,
Thank
Prof.
God I asked that question.
Amen.
Monday is your exam.
Thank-
Nobody took my attention. So,
Thank you, sir.
all right, man. Have a
The
wonderful
timetable
evening.
just came out yesterday.
God bless you.
And you too.
Thank you,
Bye.
Prof.
Now
Prof,
go
sir,
to
Prof,
say Miss Abi. You say what?
Thank you, sir. Thank you, bro.
Say the Safi. Good night, everybody. Or have a good evening.
sir.
The day is still young. Huh? The day is still young,
Thank
Nigeria.
you,
9,
sir.
10.
Thank you. All right, till Thursday.
All right. See you then.